Cardano is not having a good time, right? It went down from the all-time high by more than 80%. In this video, we are going to look at relative valuation. So we're not just going to look at the US dollar chart, we're going to look at the relative chart to Bitcoin, of course, also relative to Ethereum. So that's interesting, right? Cardano is in a sideways trading range versus Ethereum over the long term. But let's also look at relative valuation to other smart contract platforms. So it's interesting to note, for example, that the value, the market cap of Cardano relative to its total value locked is pretty high. Meaning other smart contract platforms do have already quite a bit of activity, quite a bit of capital locked. For Cardano, that's only 130 million. This is the long-term development. So when you buy Cardano, you're really betting on the future. You're hoping that similar kinds of application will be built and that the adoption will come. Thus, we're going to look at relative valuation of Cardano to BNB, to Tron, to Avalanche. This is ADA versus Solana, ADA versus Matic, and ADA denominated in Phantom. Why all of those altcoins? Because those are the ones that are the largest in terms of total value locked. So basically the toughest of the competition. Now here on the US dollar chart of Cardano, or to be more specific on the Tether denominated chart, we are seeing a moving average here. What's that moving average? It's the 45-day moving average. So I'm not just taking any kind of random moving averages as you have seen maybe on other YouTube channels. I'm backtesting those moving averages. I'm trying to find the best duration for a moving average. For Cardano, that's the 45-day. So when I did this backtest almost 1 year ago, that's the best result. I haven't yet done an update on this, but the idea is when the price is below the moving average, we are completely in cash. When the price is above the moving average, we follow the price movements. When you've got such a strategy, you tend to outperform just buying and holding. This kind of an approach works for many altcoins, and Cardano is no different. Currently, we are below that 45-day moving average, meaning it might make sense to be somewhat cautious to wait until overall momentum turns bullish again. This is not necessarily the time to catch a falling knife. You rather want to be invested when everybody is getting excited and not when things are rather bleak. Now, this is the long-term chart of Cardano versus Bitcoin. So this chart starts in April of 2018. And unfortunately, Cardano was not able to outperform Bitcoin over that time. A loss of 40%. And the reason why this is unfortunate is because Cardano in the end is more risky than Bitcoin, right? Its market cap is smaller. More risk should be compensated with more reward or with more return. And of course, during 2018, we didn't get that compensation because of the crypto winter. But over the long term, we still want to get some kind of an outperformance. When times are bullish, we do outperform. But taking both bear market and bull market into consideration, and currently with a rather sideways movement of Bitcoin, Cardano tends to underperform. Another way to look at this is to check the Cardano dominance, as in how much money of all of crypto is allocated to Cardano. And in here, we can see these waves quite nicely as well, right? Sometimes Cardano is pretty expensive. It's a large fraction of all of crypto. Sometimes it's rather small. So this is a 10x difference, right? 0.4% of all of crypto in Cardano during a bear market, more than 4% during a bull market. Currently, we are pretty much in the middle. 1.5% of all of crypto's market cap is in Cardano. Now, how did Cardano stack up versus the largest of the smart contract platforms? That can be seen over here. So Cardano versus Ethereum. Now, it's expected that we see an underperformance here as well, right? Because Ethereum outperformed Bitcoin over the long term. We also expect a lot of volatility. So the question really is, do you want to hold Cardano just over the long term because you like the fundamentals, you like the team, the roadmap, or do you rather prefer to trade the waves? Because potentially it might make sense to try to time this, right? 180% over here, then a loss of 60% over here. Then again, a gain of 330% here. So maybe we should be betting against the general trend. Currently though, we are not particularly low. How good is risk versus reward? It depends on where you draw the floor. A 30% drop versus Ethereum is easily possible. We have also seen historically almost a 40% drop from here. The potential gain is much larger, 190%. Why does the drop here look worse than it actually is? Because we are looking at a logarithmic scale. Once we look at this from a linear scale, these spikes, they are much larger. And that's, I think, a pretty important learning here, right? If you do want to get into trading any cryptocurrency for that matter, you don't have much of an exit window. So the price tends to be at those lower bounds for a much longer period of time than they tend to be at elevated levels. So when we do shoot up at a certain point in time, exiting quickly is key. Otherwise, all you have is paper gains, and that's what most people end up with. They have been rich on paper for a week or two, but they haven't taken advantage of the opportunity. And so you just end up holding the bags during low periods of time. Now this is ADA versus BNB. And BNB did get a lot of adoption, right? So the Binance Smart Chain is the second largest in terms of total value locked. A lot of applications built on there, 402. It's only slightly behind Ethereum. Why is the adoption so high? Of course, it's relatively scalable, right? Transactions don't take that much time. It's not that expensive. It is, of course, centralized to a certain degree. And the market cap relative to the total value locked is also not that cheap in the grand scheme of things. But all that DeFi, all that crypto gaming, it does boost the Binance Smart Chain. The peak we have seen there is in May of 2021. Since then, we are somewhat declining in US dollar terms. Not so much though in BNB terms. There we are pretty much constant. ADA didn't yet see that kind of an adoption, right? We're still fighting with technical issues. We're still fighting with actually using applications on Cardano. Thus, the underperformance versus BNB is 90%. So this gives you the potential upside, right? If Cardano, and that's obviously a very, very big if, right? But if Cardano at some point in time can get similar traction to BNB, can get similar kinds of applications built on it, then why wouldn't it grow in terms of market cap to a similar size to BNB? It might even outgrow it. Maybe it's a bit less centralized, or it could develop to be less centralized. So this could then be the floor. I personally have a little bit of my doubts, right? So I am not invested in Cardano. I first want to see real adoption. I rather miss out on the initial part of a rally and then ride the momentum. I find it a bit too risky, but investors have different kinds of risk tolerances. So place your bet where you feel comfortable taking risk. This is Cardano versus Tron. Tron had quite a bit of a rally because of its USDD stablecoin launch. It's quite interesting actually that Tron was able to make that much of a gain following the UST collapse. Tron itself is not doing too great relative to Ethereum. So I'm not sure if you're aware of that, but let's look at this. Tron versus Ethereum is not the nicest of all charts. Of course, initially the rally with the ICO, but since then a relatively constant decline. So Cardano being able to somewhat keep pace over the long term isn't that massively impressive. The altcoin rally, by the way, it started in beginning of 2021. So it was Cardano that rallied first. Now it's Tron. When we look at Bitcoin dominance, we see it started really collapsing in January of 2021, right? So most of crypto was in Bitcoin at the beginning of last year. Then the altcoin rally started. And this is where Cardano was able to outperform Tron that much. Let's look at Cardano versus AVAX. AVAX is pretty much a direct competitor to BNB in terms of gas fees, how much you pay on the chain to transact on it. You've also got a lot of adoption of Avalanche, as in many protocols are hosted on AVAX. The market cap to total value locked isn't as high. That's probably due to the inflation rate. So according to Messari.io, the current inflation rate of Avalanche is 26%. So unless we don't see a growth of at least 26% per annum in AVAX, the price tends to decline. And Cardano does not have that problem with inflation. The return you get on staking on Cardano are much lower, meaning even though the adoption of Cardano was slower, the price itself was able to somewhat keep pace. With the recent upgrades and hard forks, we can even see Cardano now recently outperforming. That's always the problem, right? When you've got a rather bearish or sideways trading range movement in crypto, when you've got a lot of inflation on your token, as is the case for Avalanche, you are likely going to really drop heavily in price, and this is then what benefits Cardano's relative valuation to Avalanche. This is Cardano versus Solana. Solana does have a lot of issues recently because outages happen all the time. The tokens are also relatively inflationary due to the early backing of venture capitalists. Still, the long term does not yet look that great for Cardano. As said, I would wait to get into Cardano if you're a medium-term trader until we have crossed this 45-day simple moving average, right? This is what historically worked the best. By the way, if you're interested in an update of that backtest, feel free to simply request this in the premium membership. So this channel has a premium membership that's currently $49 US per month. We've got a private Telegram group where you can ask me anything, where you can request backtests. I haven't done a Cardano backtest for quite a while, so if you're interested in more information around this, feel free to check that out. The link is in the video description. It's thebitcoinstrategy.com. Now let's continue with Cardano versus Matic. Polygon Matic, a very nice, extremely cheap blockchain. The problem here is congestion. Sometimes it's hard to get your transaction through when there's a lot of activity on Polygon. Polygon is not really a layer 1, so it's technically a scaling solution to Ethereum. But in practicality, when using Polygon, it's pretty much like a layer 1. You still have to bridge your funds. You still have to switch the network. When you trade NFTs, you still have separate NFTs to Ethereum itself. So in theory, it's built on top of Ethereum. It's EVM compatible, Ethereum Virtual Machine compatible, such as the Binance Smart Chain or Avalanche. In practicality, it really doesn't feel that different to using the said BSC or AVAX or Phantom network. Probably due to the same reason as with other underperformances, ADA is not able to outperform Matic due to its lack of ecosystem, due to its lack of adoption, which is currently just at 10 protocols for Cardano versus 259 protocols for Polygon Matic. Let's also look at ADA versus Phantom. Phantom is also relatively centralized. It's very cheap to transact with as well. It did have a few hiccups recently due to departures of high caliber developers. I personally like to use the Phantom ecosystem, but in a bear market, it doesn't do too well either. We have seen times where Cardano was more expensive than Phantom and the other way around. Currently, Cardano is 1.6 times roughly more expensive than Phantom. We've also seen the exact opposite. So these flip back and forth every now and then. I'd argue that betting on either chain is relatively risky in this current environment. In case you're new to this channel, don't forget to subscribe because I publish videos regularly. And if you're looking for a public Telegram group, simply search for Bitcoin Strategy channel within the Telegram app. We are now more than 2,000 people over there. And as mentioned, there's the Bitcoin Strategy Premium membership. There's a lot of value over here. There's a daily market update, so exclusive content every single day, a dedicated course to learning, technical analysis, and of course, a lot of other benefits. More information are in this video. So hope to see you in that video. Thanks for watching this one. See you over there and bye-bye.